Very exciting. So let's look at the charts and see what those are telling us. The diamonds have been very helpful. I have been talking about the wedge for a long time now, and it has done what it's supposed to do. You know, basically every single chart looks something like this, in which we had a wedge pattern dating back to the April 7th Liberation Day bottom. At some point or another, some earlier than others, things got a little bit fuzzy here, a little bit raspy, started to break down a bit, broke the trend line, and it would be fitting, I think, to change this to red, or I don't know why red's not available, but I haven't, so that's red enough, and stay below it ever since. And it was only here, back on the 3rd of October, that it made one last gasp effort to get above that broken trend line. It failed, even though it was a lifetime high that day. And then after that, red, my favorite color, red. Today in particular, down really hard, biggest down day in a long time. So that is more or less what we're seeing in all kinds of places. I would also add that the AI / hyperscaling sector is the only thing keeping things propped up. If that starts to fail, well, God help you at that point, because that is the market now. It's as much of the market as Cisco was the market in 2000. You know, because the market really was broken as of March 2000, but the networking stocks kind of held things up through the summer. Once that gave up the ghost, what was that? NASDAQ down 83%. So yeah, AI, that is the only hope the bulls have. The spider didn't break as long ago as the diamonds, but it's the same kind of phenomenon. It cut through its own trend line on the 24th. Here again, let's change this to a bit of a more appropriate color. And it has stayed below the line ever since. And it was just kind of vexingly, annoyingly, irritatingly, nettlesomely screwing around for weeks. And then finally today, wiped out 2 weeks of gains in a blink of an eye, which I kind of dig. So that's pretty cool. And the IWM, the small caps, finally, after all this waiting, this has joined the party. For the first time since April 7th, we have broken the trend line. So this is another desperately needed feather in the bearish cap of the 2 bears left on planet Earth, 50% of whom we're talking to you right now. So this is the IWM going back for its history. And as you can see, we had a lifetime high just days ago, but at long last, we finally cut through that trend line, giving the bears an opportunity to cut this thing lower. It's not just the US. EEM down 3.7%, because the emerging markets have been slavishly following the US markets higher. And I emphasized yesterday and the day before about China, and FXI down really hard, 5.59%. You know, China's simulacrum of capitalism has been able to, kind of fake it till they make it for a while. But, the numbers are fake, and the government is dreadfully supportive of any failed businesses there. So it's quite the illusion. And so on a day like this, a month's worth of gains can be laid waste. For me in particular, I've got 30 short positions, one of which, kind of a favorite, is Baba. I mentioned this one early this week. It's been a big winner, down today alone, almost 9%. I've trimmed it a little bit, but it's still a honey of a pattern. And of course, the market is like, still, it's like we've had like 2 hours of selling. It's incredibly, insanely overvalued, more than any time in history, higher than 2000, higher than 2007, higher than any time. So it will take just a global cataclysm of an epic scale to get things to be like, oh, it's properly priced. So yeah, 2 hours ain't gonna do it. NVIDIA was actually up earlier today for a while, but it's down. It hasn't broken this modest bullish pattern here. Should we break below this line, that will be another thumbs up to the bears. It hasn't happened yet. We've seen this kind of thing before. This could be a one-day wonder. This is not the beginning of something big or something like that. No. This could be it. This could be the entire thing. Over the weekend, Trump might say, just kidding, and then all is well with China again. But what we try to look at is the bigger picture, and instead of just like, what's he going to say next, which even he doesn't know, just using the charts as a rigid guideline and basis for an attempt to see reality. The cubes, which of course are very heavily influenced by the likes of NVIDIA, is down quite hard, 2.86% on the cube. The NASDAQ itself, the NQ, down over 700 points, once more blowing up. 2 weeks of gains, lickety split. And it's, if it is the beginning of a new trend downward, there'll be lots of wiggles and waggles on the way down. None of these is a straight line up or down. But the key thing is that the uncertainty about, these trend lines has been dispatched because the lines have been broken. And like I said, for me, it's sort of like, it's all about relative performance. And the fact that my entirely short portfolio was profitable right from the get-go, even when everything was green, was pretty cool. And that's what I wanted. That's how I wanted to behave, sort of like put its fists on its hips and defy everything. In the world of semiconductors, I have been short SMH. I've got some individual shorts. One is ON on semiconductor, down 7.4%. And once more, these things have had triple-digit gains this year, based upon the notion of AI. And if for whatever reason, because even now the likes of Goldman Sachs, it's going to be years before we know, that they're making excuses already. It's like, check back with us in 2035 and we'll see. We give it time. If people lose patience, or if data starts to come out that's like, this doesn't do anything for anybody in a profitable fashion, then you could see the wheels fall off. Because you see these startups with 22-year-old founders, like, at $3 billion valuations. Apple was started with $1,700 in funding by Steve Wozniak selling his calculator and Steve Jobs selling his VW bus. That's how it used to be done. So there are trillions and trillions at stake. Palantir was trying to make a breakout from this high. It's not done so yet. This is another one of my shorts. Like I said, I got 30 shorts. It's easier to say when I'm not short than when I am short. But Palantir's down nicely. Of course, this has had every advantage with Peter Thiel having the president's ear. But even so, this is down 4.25%. Another position I'm in, which I just got into yesterday early, was AMD. Now, AMD kind of spoiled my Monday because it went blasting higher like so. I'm getting my skin back on that one. I'm getting my pound of flesh away from AMD and what's her name? Lisa Su. And I'll happily hold on to this one until we at least close that gap. So that's unwinding nicely. What else is going on? Well, crude oil down really hard thanks to peace breaking out. And so this is sinking nicely, 4.39% on crude oil. And once again, as a long-term guide, if we break this, that would be quite the big deal. It hasn't happened yet, but amongst them, I'm short things like Murphy oil, NUR. And you've seen these before. These aren't after-the-fact announcements. We talk about these well before. But here's Murphy down double digits. Can't be bad. And then HAL, Halliburton, down 5.77. Nice, big, thick old red bars. IBM, another short, down about 2.5%, having come off this beautiful shooting star pattern, lifetime high on an intraday basis here, but red, all the way down. Kind of bracing myself for Monday. You could have a kind of a snapback rally on this kind of thing. As far as what in the world is Powell doing there? I try to arrange these to kind of tell a story. I'm not sure what on earth I'm thinking with Powell. That's kind of out of place because I'm not short that, I'm not long that. So we'll just move on. A couple of other shorts here. GPN, remember this one? Global Payments, down 4.38%. I got back into Meta today. I got sick and tired of seeing this thing rise. My long-term view of this is that it's going to go fantastically lower. And so we're getting a nice reversal on that. I shorted that early today at good prices, and we've undone this week's worth of gains. And another kind of obscure one for you, Lumen. Now this data doesn't go back quite as far as my data, so it's not a very compelling chart. My own data goes back for decades, and it's an eye popper. It's really good. So this is down 3.43% on Lumen. And our old buddy Abercrombie and Fitch, I keep getting tempted to cover and take profits, but I swap my hand away from the mouse, and good thing too, because this keeps falling down over 4% on A and F. Here's another new one. Just got this one yesterday. Never traded it before in my life. Cognex. Shorted this yesterday, down 12.67%. And this is, like I said, kind of a more obscure one, but I think could have plenty of downside to go. Kohl's, another winner here, KSS, down, goodness, 6.15%. Cute little head and shoulders right there, kind of a pattern within a pattern. And one last one, I know this is a long list, but our old good friend Wayfair, symbol W, down 5.52%. So I sure do like saying the word down more than lifetime highs. That rolls off the tongue much more nicely. On the long side, I'm not in TLT, but I got to say, bonds are doing nicely today. 1.66% pop there, but I am in our good old friend, we've talked about many times, IEF. IEF is up more modestly, 0.69%, but the hope here is that, see this lovely symmetric triangle pattern, is that we can complete that triangle, bust up to the upside of that, and see a lot more gains from there. So that is my, just in summary, like Baskin-Robbins 31. I've got 30 shorts and 1 long, that is to say IEF. So fantastic day, great way to end the week.